transaction, and we kickstart the show with exactly that. The 4,225 crore rupee IPO of the International Gemmological Institute is set to open on the 13th of December. The company is the world's second largest independent certification and accreditation service provider with a global market share of 33%. Rima Tendulkar caught up with the company's MD and CEO Tehmasp Printer and began by asking him about the rationale behind pegging the valuation of the company at a whopping $2.1 billion after Blackstone acquired the company from the founders in May last year for only $570 million. Listen in.
We have the expertise and the knowledge over the last 50 years. So we have a legacy of 50 years. And now, since Blackstone has come into fray, we have consolidated ourselves. Plus, lab-grown diamonds, which is the greatest growth factor, has taken off. Over the last 1.5 years, you will see even from our balance sheets, our growth rate has been immense. Where lab-grown is concerned, it's the new age diamond, and it's a new kid on the block, and we are sitting on the top of it. So, taking all these things into account, we are very happy to have Blackstone support us.
And how long will Blackstone stay committed to the company? Because it's a PE and they have their own fund life.
Yes, so I believe Blackstone is committed for the next 10 years, which could also possibly be extended by a couple of more years.
Okay. So now this entire IPO size, 4,225 crore rupees. Now it includes an offer for sale. So promoter stake comes down from 100 to 76%. Is that correct?
Yes, you're correct on that. The promoters will dilute the stake to around 76%.
And this fresh issue of 1,475 crore rupees, of that 1,300 crore is to acquire 100% of IGI Belgium and IGI Netherlands from Blackstone.
That's correct.
Take us through this. And what would the consolidated financials look like?
Yeah. So what happens here is initially we were driven as 3 verticals. Okay. Now today we are in the consolidation mode. We have taken the lead in the lab-grown diamonds, and we want to make IGI into a global entity. And from that perspective, Belgium, where we initially started IGI, has the ownership of the brand, and that also gets attached to, so all 3 combined verticals become a global entity, to a force to reckon with.
Okay. And what would the combined entity's financials look like?
For the last 3 years, we have a consistent growth pattern, CAGR being at 32%, EBITDA being at 36.8%, and the PAT at 37.6%. So, and we have reserves of about 500 crores, okay? The cash balance is 500 crores. And the revenue has increased where lab-grown is concerned from 35% to 59.5%, which is nearly 60%.
So do you think this revenue growth of 32% that you've seen CAGR over the last 3 years, is that sustainable going forward? Can it continue at that on a blended basis?
Definitely. Lab-grown has been on the scene since just about 1.5 years, okay? And it is a very affordable diamond. Everybody strives to have a diamond. And today they have the opportunity to buy an affordable diamond. If you see, 1.5% of the Earth's population buys diamonds, and that is all natural. With the affordability of lab-growns, this percentage is already steadily increasing to 5, 8, 10%, and even beyond. So the market size and the consumer size is increasing rapidly.
So let's break up your market share. It's 33%?
Yes.
Of that, what is the market share of natural, and lab-grown is 65?
Okay. So overall, our market share is at 33%, of which 20% comes from natural diamonds, and 13% comes from lab-grown diamonds.
13?
13,
No.
1-3.
What's the difference in margins between natural diamonds and lab-grown, if you have to certify it?
Okay. So natural diamond is unique. And each diamond has to be taken through the entire spectrum of grading, while lab-grown is more volume-based. It's a man-made diamond, so the production is more standardized, Okay, so what happens is when natural, it's unique and value, while lab-grown is volume based. So, you know, we have economies of scale where lab-grown is concerned, and we have uniqueness where natural is concerned.
Fair enough. But now, as the revenue contribution of lab-grown continues to go up, as you said, lab-grown diamonds revenue contribution was 35% 3-4 years back. It's now closer to 60%. As that number keeps inching up, will it hurt your margins?
No, we will continue to get our economies of scale. We have very good AI incorporated in our systems. We have got a lot of automation incorporated in our systems. So both of these help us in being much more and more efficient.
What about if prices come down? Because your RHP says the prices of lab-grown fell by 37% from calendar year 20 to 23, and prior to that, from 16 to 20, prices of lab-grown fell by 65%. Don't you charge a commission on the final sale in terms of certification? I mean, won't the decline in prices hurt?
No, so see what happens is a lab-grown manufacturer, polisher, has huge capexes and opexes, okay? So today the price is stabilized to a level where I don't think they can go any lower. Then it becomes unsustainable.
Okay, all right. That's the new IPO. And of course, we'll keep getting you more updates on this one. But